Morning traders and investors. My name is 𝗧𝗴𝗀 and I'm the senior strategist for 𝗧𝗴𝗀𝗲. Today is Friday. It is the 15th of October. The month is halfway done. Big week. Let's review. Let's talk about the biggest winners of the weeks, the biggest threats, the biggest opportunities. What do we get out of this week? But first, let me start out with my analysis. Dow Jones is opening up about 150. This is anything but random. As you can see here, as I always say, anything above 75 to 85 is not random, either up or down. We're up 150. Looks like the market's going to be pretty strong today, at least on the opening session. The bond market's down. It's down about 83 ticks. We still have a long position that we got into here as a hedge just in case the market crapped out, but it's been doing pretty good. It bottomed out. Now it's up here. I have a profit target like at the low 146, something like right over here. But I think we're going to go a little higher on the bond market because I think we're going to have more volatility in stocks. And if retail sales data comes in weaker than expected, which is coming out today, and I'll talk about it in a second, there may be another rise in bonds. Because remember, and I want to kind of go through this so you can see the scenarios play out. So this is the expectation. We're looking for a negative 0.1%. Now, here's the interesting part. If you take away the vehicles, we're actually positive 0.4% on the expectation. I'm not really too concerned about the vehicles because they've been really kind of confusing and they've been kind of going in and out. So I'm really concerned about the X vehicle number. So again, the consensus is 0.2 growth to 1.5% growth. And the consensus, that's the range, and the consensus is 0.4. If we're lower than this is really important, and I want you guys to pay attention. If the number comes out weaker, if retail sales is weaker, retail sales is 2/3 of the economy. If the number is weaker, then it puts the Fed in a better position not to take action, which would be bullish for the bond market, right? If the number is really solid, well, Fed has a lot less to say about, taking the gas pedal off the influx of money coming into the bond market. So again, it's one of those situations for the bond market where bad news could be good news and good news could be bad news. I want you guys to understand that in terms of directions of bonds, and remember, there's a 180 degree difference between bonds and interest rates. Interest rates go up, bonds go down. Interest rates go down, bonds go up. So when I'm talking about bonds going higher, I'm talking about interest rates falling off the cliff. Now, volatility is we are not in danger zone anymore. We're now at we're nowhere near 20, as you could see here. And if you look at the put to call ratio, you will see that we are no longer in danger zone. We're now in the random zone, which is positive. It means we're not stretched out. Excuse me. Sorry about that. So the markets are looking like they're going higher. The only pickle here is, if you look at the SPY, and we had a pretty good day on the SPY, we are just now, for the first day, trying to get above the 50-day moving average. So there's a good chance, there's a really good chance we're going to go up again. And I told you this was just a shakeout. There wasn't much to this downside. Now, I know the last couple of months, since September, it's been really rough. I mean, look at this. It's been really rough, right? Especially for directional traders, but it looks like we're coming back out of this. So if you want to make sure we're bullish, wait for 2 days where the low, like today, isn't touching the blue line. You want to see 2 days completely above the index, sort of like the trading action we're seeing right here, where the low of the day doesn't touch this. Now, if you look at the small caps are already above there, which I predicted would happen. Look at that. We're almost at all-time highs. And the reason for that is because investors and traders are they're rotating their money out of large caps and into smaller stocks because there's less interest rate sensitivity. I wanted you guys to understand that. And again, if you look at momentum levels on the performance, you could see it clearly here. Look at the small caps. 60% are trading above the 50-day moving average, while the S&P is just now breaking up there. By the way, momentum levels and trading action after the sell-off we've had are finally in line, and it looks like the market is ready to go higher, as you will see right here. So we did not miss a beat with this. That's the momentum levels. And as you can see here, we bounced off this level and we're going higher, and I think we're going to go back up. As far as individual sectors, and I've been talking quite a lot about this. the sector that's breaking out to new highs yesterday was the consumer discretionary sector. Retail sales, consumer discretionary, you see the connection? So again, you got to pay attention to this in light of the report that's coming out today. It's going to come out in about an hour and 9 minutes. Pay attention. So it'll come out before the market opens, so we'll have a good idea of where we stand. But as of right now, I mean, check mark. The most speculative sector in the S&P making new highs. Check mark. Momentum levels coming off of low. Check mark. Put the call ratio is back in neutral zone. Check mark. Volatility is below 20. Check mark. Bonds are okay. There's nothing really crazy about bonds. So the markets are stabilizing. Now, in terms of global news, technology companies powered the biggest rally on Wall Street since March. A few weeks ago, we had the biggest sell since March. Now we had the biggest rally since March. Bank earnings have come out. Bank of America, Wells Fargo, and Morgan Stanley. So far, the numbers are better than expected. So far. China's going to report its last quarter growth on Monday, in another indicator of how recovery from the pandemic downturn is progressing. We're going to take that report with a big grain of salt because, well, it's China. What else can I say? Businesses are still facing pressure from rising costs, as I mentioned to you guys in the beginning of this week. This week was all about consumer prices and retail sales. The Labor Department said inflation at the wholesale level rose 8.6% in September compared to a year ago, the largest advance since a 12-month change was first calculated. So much for transitory, right, folks? It's transitory, and it doesn't feel that way right now, but it looks like it may be stabilizing. So as far as trades we took this week, I'll just highlight a couple of trades for you this week. We took Adobe. We got into Adobe for precision profits. We got into the stock. We held the stock for 3 days. We got into it about here. We got out around there. We made 3.8% on the stock and 28.35% on the option. We held it for 3 days, so we got in right here and we got out right there somewhere. Let's see here. We got in on the 5th. Right here. We got in right here on the 5th, and we got out right here, I think, right there on the 8th. Now, we missed this upside, but we still made 28% profit. We were nimble right now because we didn't know the market was going to have its biggest day, and we are following a system. Another trade that we took was Philip Morris. Now, this trade we held for 13 days. We got out of it at a 28.74% drop. We got into this trade on 10/14. 10/14. Let me see here. No, sorry, we got out of it on 10/14. We got into it. I'm just looking at the dates here, so I apologize for the back and forth. We got in on it on 10/1, right here, and we got out of it on, when did we get out of it? On the 14th, which was right here. So we got into it here, out of it right there, and we made about 28.74% on that trade too. And on the stock, it was 3.31%, and we held it for 13 days, including weekends, right here. Not too bad. We also had a 48% gain in another program on Intuit and a couple of other profits. It was a pretty good week, actually. But overall, I want to tell you guys something. This period right here was not pretty. This was our drawdown because this was the worst drawdown we've had since March in the market, and we took it under the chin just like everybody else, but it looks like we're coming out of it. Now, in terms of the best stocks right now in the S&P, Moderna, Devon Energy, Diamondback, Apache, Marathon, Energy, Basic Materials. Albemarle's coming back. Mosaic's coming back. Gardner Group is coming back. Dexcom is coming back. Industrial and Energy are coming back. In terms of the worst stock in the S&P, Citrix Systems, that's the competitor to Zoom, the broadcasting, the web broadcasting where we use for our webinars. Citrix is the competitor. That's GoToWebinars. Las Vegas Sands is not doing well. Wynn is not doing well. Shippers are not doing that great. Global Payments, FedEx, a lot of these are having supply chain bottlenecks. So that's where the downside is right now. Now, in terms of stocks, I want to show you this one stock that I'm actually liking right now. 1 second here. I'm in the wrong place. Where is this thing? Here we go. This is a stock that I'm liking right now. I know earnings are coming out. It might have already come out, but I like this pattern, and I like how it bounced off of the 50-day line. And I think if bank stocks are going to go higher, we'll see higher prices. So I would be getting in right around here somewhere in this area. And if it breaks the 50-day, like way down here, I would get out and I would ride it till about the 64. One of my favorite banks, USB. I like the downside. I like the downside. I think this is an opportunity. I think the bank will go higher. It has been trending quite well, just recently made all-time highs. And I love pullbacks coming off of all-time highs. Now, before I let you go and enjoy the weekend, I want to let you know, this week worked out exactly as we expected. If you don't believe me, look at my videos from a week ago. I believed the market was going to turn around, and it did. The biggest threat right now is that retail sales report that's going to be coming out in about an hour and 3 minutes. Pay attention. If the number's weaker, it may pull the market down and bonds up. If the number's really strong, it may pull stocks up and bonds a little down. That's just the name of the game, and we're still bullish on bonds, and I'm still long bonds for the near term, because I think that's the downside in the bonds was overdone when we sold off. Now, I want to tell you guys something important, and I want to make sure you pay attention. Millions of traders lose money every day. Imagine being on the flip, on the flip. So instead of losing, you'd be winning, right? Imagine flipping those losers into winners. I want you guys to discover a simple trick that's been 2 years in the making, taking advantage of the winning side of a losing trade. It's helped dozens of new traders see profits like 78%, 82%, 91%, even triple digits. The trick? Proper positioning against the worst traders on the planet. I'm not kidding, folks. If you take a room and if you put the worst traders on the planet into that room, and if you fade their trades, you're going to be a millionaire. I mean, obviously, I'm theorizing, but think about it. If you take the worst traders in the room and you take the opposite side of their trade, you'd probably do really well, right? Hypothetically, of course. Are you ready to learn about this incredible strategy where you're actually taking advantage of the worst traders on the planet? I hope so. Click the link below to learn about it right now. And as always, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Folks, stay ahead of the market by being the first to be notified when we post our next video. And have an amazing weekend. On Monday, we're going to talk about our biggest threats and biggest opportunities for the week ahead. And if you behave yourself over the weekend and send me some nice love letters or post some nice chat, I may even give you some hot picks on Monday. How about that? No cost, no catch. Bye, guys. Have a great weekend, and keep your eye on retail sales. Talk to you soon. Bye.